Hey everybody, it's Mike over at Taxes and Bricks. Well, welcome to another episode of Taxes and Bricks Mailbag on the run from the law. No, I'm just kidding. I'm just on my way home. So, thought I would record a little mailbag here in the car. It's episode 42, I think is episode 42 today. Wow, great. 42 episodes. And I think I checked, we are up to like 90-something subscribers. You guys are great. Thank you so much for that. I don't know really what I get at 100 or 200 subscribers, but let's get up there anyway. Ego boost, right? Today's mailbag, we're going to talk a little bit about a couple of deduction questions. What to do if you make a mistake on your tax return during tax season, and what to do if you notice a mistake after tax season. We're going to talk a little bit about what happens if you're a small business owner and you also share your cell phone plan with a spouse or with your kids or with somebody else. And we're going to talk a little bit about bonuses. 'Tis the season. Everyone getting their spring bonuses coming through, or they're finally getting paid for their last year's last quarter bonus, and they want to know what the tax implications are. So hang in there for just a second. I'm going to throw up a quick disclaimer. Then we're going to get on the road. We're going to talk some taxes.
This video is rated TAX and contains occasional ramblings, mild attempts at humor, self-deprecation, irreverence, brief numerical examples, and adult tax and accounting advice that may not be suitable for all taxpayers. Viewer discretion is advised. Before following any of the advice in this or any of our videos, you should always consult with a tax professional. Thank you.
All right, thanks for hanging in there for that disclaimer. So, on with the mailbag. First question today, or actually this week that I got, was about what you do if you make a mistake on your tax return. So the specifics of this situation, even though I've changed a lot of the details and the names to protect the innocent for all of these situations. Somebody did their returns on TurboTax or Tax Act or something, I don't know. Realized they made a mistake. Ordinarily, their taxes are pretty easy, but they made a mistake, and so they asked somebody told them, call Mike, I don't know, whatever. Anyway, they called me, and they wanted to know what they should do, and I said, fix it. You file a 1040X. It's an amended return. All states usually have an X form, an amended form as well. Fix it right away. If you fix it before the April 15th deadline, for 2021 taxes, so the April 15th deadline coming up, and you pay up whatever you owe because of the mistake, then you're golden. No harm, no foul. If you're getting a refund because of the mistake, like maybe you messed up the withholding or something like that, then great, you get back your refund. I mean, it might take a little while. Most amendments can actually be e-filed, so that's good. And if you can't e-file it, then you print it out and you figure out on the IRS.gov website where you're supposed to mail it, and you mail it in, and you're right as rain. If it's after the April deadline and you find out that you made a mistake, or you realize you made a mistake, fix it as soon as possible. If you owe money after the deadline, there's a chance you get penalized. There's a chance you get charged some interest. I mean, listen, you made a mistake. We got to own up to our mistakes. We got to take responsibility sometimes. It is what it is. Doesn't mean that it's horrible. Doesn't mean that you're a bad person. It just means you made a mistake. Big deal. Fix it. Ordinarily, if you come forward and you don't let the IRS or the state catch you, you come forward voluntarily, the penalties are much less severe. Also, if it's just a minor mistake, the penalties are pretty, minor, usually in a case like that. It's not like a willful situation where you were, caught doing something. Just come forward, fix it, pay. If you don't like the penalty, there's always a mechanism to try and get it abated. It isn't always approved, but you can ask the government, if you have a good reason, like, I was sick, or I, had a death in the family, or, a number of different reasons you can provide. Sometimes if you got bad advice from the government themselves, like, a lot of people will go and they'll seek advice from the government. They'll call the IRS, they'll get advice. If you get erroneous advice from the government, that's a reason why, you could potentially request a penalty abatement and possibly get it, okay? Next question, I think, was one that we did in a prior mailbag, although I can't really remember when, but it was about a teacher contacted me. They work for a school, and they work remotely now as a result of COVID, and they spent a lot of money setting up like a classroom in their house. It looks like an actual classroom. I mean, she showed me pictures. It's actually like, looks like the classroom that like I had when I was in elementary school. It's actually kind of impressive. And she spent a fortune. I mean, a lot of money. Unfortunately, because she's a W-2 employee, I had to tell her that, well, her classroom is lovely and I hope that it works. It's not a tax deduction, because home offices, regardless of whether you are required to have one by your job, regardless of whether it's because of the pandemic or not, regardless of any reason whatsoever, home offices for W-2 employees are not tax deductible. Period, full stop. And for that matter, neither are any deductions that you have as a result of your job as a W-2 employee. There's just no mechanism in the tax code since January 1st, 2018 for W-2 employees to deduct any expenses associated with their job, whether they are reimbursed for them or not, whether they're required to incur them or not. Okay. Next question was similar. It was about a tax deduction. I had a self-employed client, and they use their cell phone as their primary means of communication with their clients when they are not in their office or, you know, whatever. But the issue here is that their cell phone bill is bundled or combined with their spouse and one child, a teenage kid. And so they wanted to know how they figure out how much of their, cell phone's tax deductible and how much isn't. So I said, well, there's a couple of ways you can do this. Number one, if you just take a moment and look at your bill, usually they break it down by telephone number, and the charges are broken down by number. I went ahead just to make sure I wasn't crazy, and I looked at my bill, and sure enough, it's, I got a couple of numbers on my bill, and it's broken down that way. This number is that amount of money, and this telephone number is assigned this one, and then there's data plans for each one, so you could do it that way. You could also add up the number of minutes used by each telephone number, and figure out the percentage that's used by your business, and then the percentage that's used by your non-business operating members of your household. You could also do it by data. I mean, if the majority of what you use is data and not telephone minutes. So there's a number of ways you can do it. You can also just do a third, and a third. I mean, if all the amounts of the bill are pretty much spread evenly, you can just do a third of the bill. If there's 3 people on the bill, or if it's 2 people, you can do half the bill. That's totally fine. I don't know that I would recommend doing 100%. If it's not 100% being used for business, in terms of a spouse isn't part of your business or a kid isn't part of your business, but otherwise I think those other methods are pretty good and pretty defensible. All right. Last question is about bonuses. And as I said, sort of in the intro, 'tis the season. A lot of clients that I have, a lot of people are getting, right now, paid out for their year-end 2020 bonuses. Or 2021 bonuses. My God, 2021 is over, and they got, the jobs come through, and they figure out what their bonuses are, and they're now starting to get them, January, February, March, April. A lot of people are getting in the spring, or about to get their spring bonus for, say, their performance during the first quarter of the year. So they're getting a quarterly bonus. So the question really pertains to a client who already got their bonus. Usually they have about, 15 to 20% in taxes withheld, federal income tax withheld. They got the bonus. It was a pretty substantial bonus. And they noticed that the federal income tax withholding was closer to like 27 or 28%, which is a lot more than what they usually have withheld. And so the question was, are bonuses taxed at a higher rate than regular salary? And the answer is no. The federal government does not differentiate between bonus and wage. They just consider it all to be wages. And so whatever your W-2 says at the end of the year, that's the number that goes in the return, and that's what's used to figure out what bracket you're in and your effective tax rate. The government doesn't care if it's made up of bonus, commission, reimbursements. They don't care if it's made up of salary, wages, it doesn't matter. Okay? It's all treated the same under the tax code. So why is it that this client had 27 or 28% withheld when they usually have 15 or 20? Well, I don't really have a good reason or a good answer for that. I have an assumption, okay? Time was they did this a lot, the payroll companies, but they don't, and again, I don't know why. I mean, it's been going on for years and years. I mean, I've been doing this, 20 years now, and every year I get the same question, bonuses, bonuses, bonuses. Here's my theory on it, okay? The payroll companies see this random paycheck come in, okay? And they see it's much larger than the one from the week before or the week before that. And I think that the payroll company kind of freaks out a little bit and says, oh my God, this dude's making 100 grand every 2 weeks now. We got to do something about that. And they take it upon themselves to withhold more money, which I guess is nice, because if your bonus is high enough, it's certainly going to push your effective tax up, and therefore you're going to want extra taxes withheld. But it doesn't mean that the bonus itself is taxed higher than your normal wages. So I don't know. The one thing you can do is, if you're getting a bonus and you know that your bonus is coming, and you know that your company is one of those companies that goes ahead and withholds a much higher percentage on the bonus than they would on your normal wages, I suppose you could talk to your payroll company ahead of time, or the payroll department ahead of time, and see if there's something that can be done to fix it. But I mean, ultimately, I don't know. I mean, talk to an accountant first before you start messing around with your withholding, and definitely watch the series on withholding before you mess around with your withholding at all in general. So, but no, the answer to the question is, bonuses themselves are not separated out from wages on a W-2 and then subject to a higher amount of tax on the tax return. It's just all kind of aggregated together, and where you land is where you land, and that's how it works. So, that's it for Mailbag today. Nice and easy, pretty quick. Thanks for watching. I hope everybody has a wonderful weekend. Please go out there and enjoy yourselves. Do not think of me in my office just kind of working away tirelessly on tax returns, not being able to go out and enjoy the lovely beginning of spring weather we're having here in the Mid-Atlantic. So don't think about that. Just don't. Just go outside and have fun. Don't think about me. I'll be fine. That's it. Thanks for watching. Don't forget to like, subscribe, and have a great day.